Well, Frank Holmes, he's the Chief Executive Officer and Chief Investment Officer at the U.S. Global Investors. He joins us for a discussion on gold as well as an update from the ongoing Mining Indaba. Frank, thanks so much for making the time to join us. Before we look at the focus on gold, I know that you'll be one of the speakers at the Mining Indaba. What will you be telling investors?
Well, I'm commenting about the opportunities and the threats that we see in Africa and South Africa and the differences. So listening to previous speakers on your program, there's something very similar that resonates for investors. That is fiscal stability. That means tax stability, not moving the goalposts. And I think that's really important for investors making that commitment to any type of a commodity or country.
Frank, if we take a look at the role of central banks, how significant is this, especially following the stimulus we saw out of the European Central Bank earlier on this year?
Well, when you look at economic policy such as monetary cheap money the way it is, it really hurts savers. And the idea that they're going to have so many rules and regulations and taxes, but will make the money cheap, really doesn't stimulate huge economic growth. It'd be better to streamline regulations, create a tax stability so investors understand that, and so it's same with savers, and then let rates rise. That seems to have greater economic activity, and we saw that prior to 2008. But since 2008, policies have been very aggressive globally on synchronized tax and collection and regulations.
Frank, let's also talk about some of the policy decisions that have been made globally, talking about Europe specifically with the Greek new government. What type of impact is this most likely to have on gold?
Well, on gold, it has a big impact because it creates instability, currency instability. And I think that's the key factor to take a look at. And many countries around the world are trying to devalue their country's currency against the dollar. That way they can export their products. And the companies need that to have what's called margin expansion. So I think that that's what's going to be happening with the price of gold will probably rally from anything disruptive.
So in other words, you're quite bullish on the performance of the price performance rather of this particular commodity, despite many people not being in favor of gold as an investment asset?
You know, I've always advocated having 5% in bullion or jewelry, beautiful gold jewelry, and 5% in gold stocks, and rebalance your portfolio each year. I think that's the key element because gold as an asset class has exceptional volatility. Gold stocks is plus or minus 40% every year. It's just normal volatility.
Normal volatility. Well, we heard it from the man himself. Thank you so much to Frank E. Holmes, CEO and CIO of Global Investors.